Well, I think they're going to think it was successful to get the kind of capital that they needed. I think they don't want to see it trade below price. And I think there's going to be a lot of people, company, bankers, buyers who bought it on the IPO who are going to have second thoughts. But it's hard to judge, obviously, 6 hours into trading what people think about it. But this is not a great thing for everybody. They want to see this thing trade up, and it's not.
So, I mean, is there a common thread here? Peloton, WeWork, Uber, Lyft. Is it a pricing issue in the private market? How do you characterize it?
I think it's a combination of things. Listen, historically, the last round is just a benchmark for where the next price is, and the next price is always higher. And we have not had a great run like you just described with several companies who are experiencing lower prices in the last round. I haven't seen a tempering in the private market yet, and we'll see if that happens over the next 3 to 6 months. But I think the bigger issue is where are these valuations coming in, and what is the public willing to pay for them? What are institutions willing to pay for these as public companies? And right now it's lower than the last round, and that's something that we're going to have to recalibrate, and I expect us to do that.
Could WeWork and the debacle around that have actually done more damage, perhaps, than it has so far? Do you see that as a one company-specific issue? Because Peloton did manage to get away, and clearly IPO investors bought the IPO towards the top end of the range.
Listen, the more instances we have where there's companies that trade below their price or last round in the private market, we're going to have more emphasis on whether that does have more damage. I think one is not a good sample size. I think we're going to have some over the next 3 to 4 months. I think people are going to accelerate potentially some IPO timelines, surprisingly, given what's going on in the political arena. So you're going to get another couple examples, I think, of unicorns who want to go public this year versus 2020. That's when you're starting to make some broader assessments of the market. But it's hard to do with a very, very small sample size that we have so far. Datadog was successful. Cloudflare, phenomenally successful IPO over the last couple weeks. Let's wait to have more sample, and then we'll know more.
You said you like to wait to see a few quarters as other companies can prove themselves. Are any of the valuations, though, looking enticing now that we've seen sell-off?
The only one is Zscaler, and I pitched it last week as my last chance trade, and that is because I believe in the cloud story, and I believe that they have a unique franchise, and there's not a lot of competition to them in what they do specifically. But even that is trading at 11 times revenue, and that's still expensive for someone like me who's more of a value core kind of a portfolio manager.
Mark, what do you make of the fact that they got away with the dual class share structure despite all the focus on that as an issue following the WeWork issues?
I think this is a company that had a lot of momentum going into the IPO. There clearly were buyers around the pricing and bankers, obviously, who priced it where they had enough of an audience that didn't care enough about the dual class structure. That being said, the more examples you have where stocks break price and this dual class structure comes up, I think there's going to be a waning of this going forward, Wilfred. This clearly is an issue for some people who won't buy a deal with this kind of structure, and that's why the stock potentially is suffering today.
I mean, finally, Mark, do you see this at all as indicative of where we are in the cycle, the fact that WeWork couldn't even get out of the gate, and it's kind of been some spiraling losses in terms of public investors for money-losing companies?
Listen, we clearly have had a year with more unicorns this year pricing IPOs than before. WeWork, I think, is a very, very special example, and I think it will be a great case study for a very, very long time in so many facets. It is later in the cycle just by arithmetic. We are later in the cycle with these unicorns. I think there's so many more of these companies that are staying private that potentially will tap the public markets. I just hasten to make a big determination on WeWork and a couple other examples. I just don't think it's a valid sample size. I do think there's going to be some great companies who test the market within the next 3 to 6 months, and let's have that conversation after that.